Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss this week in the market and important points in support and resistance to give you an advantage, and also article of the week.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, August the 24th, and I mean, you're seeing the market go down. Is this just what we needed? I know we talked about it, but going from highs to like 430 down to 412, we're back in that volatile market. I mean, I know just 2 weeks ago we were talking about, damn, it's getting a little boring. We're getting all this chop. It's BS. It's whatever. It's where's it going to go? Well, it went up and it's back down now. In your personal opinion, do you think obviously it has tons more room down, but where do you see it going? What do you think's the reason for all this? I mean, not to spoil anything, but there's an article that we're going to read at the end that has like, just tosses out tons and tons of potential catalysts, including like China's financial situation deteriorating, et cetera, et cetera. Like, what do you think is, causing all this, and where do you think we're going from here?
So first, I'm going to read a tweet from Lance Roberts. He is the chief strategist at RIA Advisors. And he also has it seems like a podcast or a show. I've never listened to it. However, I like most of his
cheat
tweets.
on this one.
Yeah. Of course not. Never. That being said, he put out a tweet yesterday, and I really found it interesting. And it goes back to, the question that we always get: is bottom in? Is this 2008? There's so many different questions, and it goes back to, again, if you take the last really 5 weeks, it looks like the COVID bounce. But if you take, I've seen probably 40 people tweet it where they take the 2008 chart and put it over this one, and they're almost identically similar. So again, this goes back to the tale of all times that no matter what your bias is, you can typically make an argument for it. And I just think that Lance Roberts, his tweet has some really good information. So he said, #bear market. No more hashtag after that. Rally's average gain in 43 bear markets since 1929, 17.2%. Average duration is 39 days. This one was 17.4%, so only 0.2 off in 41 days, 2 days off. Textbook. Bear rips always, quote, narrow of 17.4% gain in S&P 500, just 4 stocks contributed 30% of the gain. That's crazy. So again, just to summarize,
I was posting a picture on Instagram of how ridiculous you looked right now. How you look like a Guido. You look like an extra on Jersey Shore.
I was just down the shore. So to summarize, he took 43 bear markets, okay? And he said the averages of those bear market rallies are 17.2%, and they last 39 days.
Okay, so
He said
around
this current-
39 days like of market time. So around let's
Yes.
say 2 months. So around 2 months of market, and it goes down around 20%.
No, it comes back. Bear market rally.
Okay. So
17.2%.
So for this market, let's say if it went down 360, that would be around 36 plus 18, like $54. Like $55, $56. Yeah.
So he's saying,
So like 410,
is he took the 43 bear markets since 1929, and the average was 17.2%. Okay, and 39 days. And he said this current one, if we don't see another new high on SPY during this time,
We got a long fucking way to go.
17.4% was the gain, and it lasted 41 days. It's almost identical to the average bear market.
Yeah, I think
rally.
it hit the bottom June 16th. So I guess 2 months from then would be and then again when we say like 40 days, I mean 40 trading days. And I think there's 21
so
in a month.
that's like what, like 6
so
weeks,
2
right?
months. So middle of June to middle of here is like exactly 2 fucking months. Yep.
Literally,
Because
exactly.
I think June 16th was the bottom, if I remember correctly. I know it's in the Yahoo article. We're reading it then. If you want a quick little pop in on it.
No, you're right. You're spot on. June 16th at 9:30.
Gotcha.
So what he's basically saying is that, again, it doesn't like the nice thing that I like about some of this stuff is that about this tweet is that it's not like short the shit out of the market, like fuck the market. It's also not like it like there has no bias. It's strictly just facts. It's strictly just here's the averages of the last 97 years and or I guess 93 years, and here is what happened, and then do with it what you will.
I always wonder what the addition of this influx of retail traders. Obviously, you've had a lot dip out recently, but I mean the internet and the accessibility. I feel like the last 20 years, maybe even just past fucking 8 or however long since no commission fees matter a lot more. Do you think like there could be a second era of trading historical data? Like where if you're going to look at something, you could be like, okay, pre this, like basically BC and AD, like, hey, because before commission fees or before you had to actually go to somewhere and send it in, like at least 20 years ago, you could start buying shit instantly, regardless if you had to pay money for it or not. And it wasn't exactly, hey, you're waiting for the newspaper to come back to see if, the price of your stock.
Yeah. No, I think you're right. I think you are correct. I think that a lot of it will matter, though, about, honestly, I wouldn't be too mad if commissions did come back. Because one of the things that a lot of people like, and
I guess you could write them off.
You can't.
As a trader.
Here's the thing. Is that
it would just kind of gatekeep people from trading. I mean, yeah, you could trade it, but it's like if you want to trade a lot to be able to write them off, you'd have to be able to trade enough to become a pattern day trader, which we've talked about, which obviously the rules on it are a little ambiguous, but let's say it's fucking whatever, 2,000 trades a year, fucking 1,000 trades a year, whatever it may be. I mean, that's still $7,000 to the average person, which is essentially gatekeeping day trading. I mean, assuming they keep it $7 or $8, $7 to $8 grand is gatekeeping the average person from being able to day trade.
So I'd be interested to hear though. So would you rather pay, let's call it $2 per commission per trade, or keep it like free like it is? However, right now inside the current system, brokers like TD Ameritrade make money majority because they don't charge from selling order flow to places like Citadel and to market makers so that they can make the difference between the bid and the ask.
So your argument is essentially them taking away commission fees is kind of like why they stopped like the GameStop trading and shit. It's because they became slaves to these bigger hedge funds.
Oh, 100%.
I mean,
that's where most of the revenue comes from.
if that's the case,
it is.
and
I can tell you right now.
I'm saying if that is a guaranteed way to prevent something like that happening again, I think most people would say a $1 to $2 commission would not be that crazy. But you also have to understand with this new influx of people that want to trade small caps and everything, $8. I mean, people like to scale out. People like to be safe. I mean, $8. Yeah, that's too much. 1 to 2, I guess if you lowered it 75%, but I genuinely do not think there is any world in which these brokers can go back to that high of commission fees, if commission fees at all. Because I mean, how do they even justify it? Say, hey, we were slaves to these big companies and we want to be good to the retail investor. We want to be true. We want to make it up. And if no one else is going to do it. And if one of the companies did it, like let's say TD Ameritrade did it, no one would fucking use them. They would just go to Webull. They'd go to Robinhood. Like the chances, stuff like that.
So ready for this?
I'm ready.
So I think this will blow
like
a lot of
Alex
people's
Jones
mind.
Episode of Joe Rogan.
I think this is going to blow your mind a little bit.
Okay.
How much do you think in 2020 TD Ameritrade's order flow, basically income from order flow was?
Are you holding a condom?
What?
Are you holding a condom?
But to do book list.
This is a green and square. I just saw it's rectangular. I just have clearly no idea what a condom
I keep it. It's a hand pocket. It's my hand pocket book. Put inside of that pocket.
Oh man.
Okay. All right. What do you think? All right. So this is even a question for everyone because I think it's gonna blow your mind a little bit. What do you think TD's payment for order flow income in 2020 was? And so think about it.
For
like,
order,
what do you think? What was their income from selling
commission?
Order flow?
What do you mean
selling?
What do you mean selling order flow?
So it's
can you define that?
So basically, think of order flow like this. Okay, you are the kid in middle school that would sell candy. Okay,
I got the hot Cheetos. Yeah.
You got the hot Cheetos. Okay, my mom charges me 50 cents every time that I eat hot Cheetos, okay? Because she knows that they're bad for me. You understand where I'm going with this? Okay? So, but here's the thing is that she can't know that I'm eating hot Cheetos because I'm inside school. However, what you're doing is that you're charging me and then you're going to my mom and telling my mom that I'm eating hot Cheetos and she's paying you 10 times what you just charged me. So like the whole broker, like
okay, so
I'm
if I'm charging you 5 cents per hot Cheeto.
Yep.
And
basically
she comes and I'm like, hey, I'll tell your mom and I get 25 cents from your mom, even though you just paid me 5 cents for one hot Cheeto.
So, and your whole job is supposed to be the Cheeto guy. However, you're making 5 times. Well,
so what exactly
is 5 times more than that snitching?
I love the example. It's very nostalgic. However, I don't know what that means for hedge funds and Robinhood. So,
well, I mean,
can you just give us the AMC and GameStop example? But how? What playbook? Like the whole order flow before it's happening? Because it seems like, well, is the retail trader getting something behind? Like what exactly are they getting?
Yeah. So basically, okay. So the way that I think about it is that basically we're both sitting at a poker table, okay? But the dealer works for me, and the dealer is telling me what your cards are.
Okay,
that's what selling order flow is.
So basically, you're paying him,
and I'm paying him.
That. Okay, and so this is how much they got from, and you're making me guess how much they got from that. Okay, and this is legally disclosed information that they admit.
Legally disclosed.
Why would they disclose it in the first place? Because doesn't this
sound... Well, they have to because they're a public company.
Why can't I buy the...
Well, you could, technically. So this is why the whole thing in November. So here's the big argument is that in November.
How much did they make? Let's hear that number first.
Well, what do you think? Just throw out a number.
Okay. Well, how much money did they make all last year so I can at least get a genuine general number? I don't know what all TDA makes fucking money on. Let me just say is it below or above $1 billion? So I can at least not tell them. Okay. 4.2 billion.
No. 1.5 billion.
Okay. Well, when you said above, I had a lot more room to go.
Yeah, you did have a lot more room. So that's my bad. But my whole point to this is that the really fucked up thing here is that it's basically like, and this goes back to the hot Cheetos, is that Dan is supposed to be the Cheetos dealer. Okay.
Like the stock dealer.
Yeah. Dan is supposed to be the fucking stock or the
stock
Cheetos
or Cheeto dealer. Yes.
And that's how he's supposed to make most of his money. However, he's making 10 times that just being a snitch for selling his Cheetos.
Well, are they really making 10 times off of selling order flow?
Literally, it's not even.
So they're making close. Like 1.5, $150 million a year off of everything else, and then 1.5 billion off of that.
I'll tell you exactly because I don't want to misspeak.
It doesn't have to be 10, but the fact they're making more off of that, why does that not raise more concerns? And if TDA did that, what was Robinhood's? Like it was Robinhood's fucking crazy.
Wait. I actually just did have that. Okay, so TDA. So this is from daytradings.com. TD 2020 was 1.5 billion. Okay, Robinhood was 0.69 billion. Oh, wait, whoa.
It seems like Robinhood would have been way bigger because they were the ones that fucking shut the shit down. Maybe they didn't have the funding that fucking TDA had, and they off rip. Citadel was like, yo, dog. Everyone's buying this shit on your platform.
Listen, but fucking TD is not even remotely close to the worst. Like Robinhood is the second. Well, is it
because they're not the biggest, or is it just because they don't take the most bribes?
Well, it could be.
Maybe we should compare it to their market cap or their income overall that year. But the fact that 90% or shit, even 75%, like you said 90%, like if it was 90%, let's say even 75%. That sounds like an absurd amount for the only income. That's the main majority of a fucking company's income. Like, how does that not either A, raise concerns, B, be completely illegal, C, just selling order flow at all? You know what I'm saying?
Yeah. No, exactly. You're right. But I think a lot of it depends on it depends on the client base. Like for instance, Robinhood probably had more users, but do their users' average account balance, is it sub 10,000? Where TD maybe less people, but their market participants are more influential. That's kind of the way that I look at it, is that, you know what I mean? Like, where's the value at for the people buying the order flow? Because but my whole thing, okay, all right, but see, this is where it gets difficult, because you can yell from the top of your lungs that you don't want people like brokers like TD to sell your order flow. Okay. However, here's the thing: if they stop selling order flow, they're going to have to make that revenue up somewhere else. Where are they going to make that revenue up?
Commission, right back where we started with commissions.
Yep. So here's the thing.
Sorry, I know we got off topic with conspiracy theories of how fucking this is possible, but it just seems odd.
What do you think? Would you rather?
Well, honestly, funds? Them being controlled by Citadel hasn't really affected me too much, aside from one fucking day out of the 4 years I've been trading.
Yeah.
So fuck. I probably would have lost more. I would have wrote them off, but it's at the same time, I don't know. It's a catch-22 for sure. Big money always wins, I guess. But before we just keep going on into conspiracy theories, it's again like a fucking Alex Jones episode, we do want to dive into support and resistance. So obviously we talk about support and resistance a lot. We all know what it is. If you don't, fucking read a book, nerd. No, but obviously support, where the stock goes down and always pops back up. Totally tons of different forms of support, resistance where it goes up and has to fight it. Okay, so you wanted to talk about specifically the types of support and resistance to identify, to use to your advantage. How many of those per are there? I mean, you got to think about there. I mean, you can look up a list online. There's tons and tons and tons and tons being able to be found with different EMAs and totally different types of shit.
Yep. Yeah. So here's the thing is that first off, because we are technically going back to the basics, obviously keeping it real simple, we have up top, we have resistance. This is typically an area inside charts where the price can't seem to move above. And again, it's resistance. So every single time,
it's like second base for Mitch.
Every time that it hits that level, it bounces off and it kind of flushes down, and so that's your resistance. And inadvertently, support is the opposite of that, being that every time that it comes down to that level, it bounces off and gives like it basically doesn't allow it to break through. Now, the important part to these is that typically heavy support becomes heavy resistance, just like heavy resistance becomes heavy support. So what that means is that if the stock is trading at $100 and resistance is 110, if it breaks above that resistance of 110 and it gets above,
dude, I'm finding way too many fucking comparisons to like the getting to first, second base and shit. Like once you made the second base once, it's like it's hard to have to get stuck back at first base,
Yeah.
Once you got two fingers in, I mean, you're not gonna start making out with her again. Sorry, Hugh's mom.
Jesus Christ. But so once we break through resistance, that 110 is now going to be heavy support. Feel me?
No, dude. We made it past feeling, dude.
I can't. So that's support and resistance overall. Now, using to our advantage is the important thing, because one thing that you'll find is that there are support and resistance points all over the place. You can make a support and resistance line almost anywhere, depending what time frame you're looking at. So it's important to be able to know what exactly is and how to correctly use support and resistance.
Yeah, I feel like in a choppy market, it's so much easier as opposed to others where it's like, I could draw a fucking line anywhere on this motherfucker.
Definitely. And this is where it comes into play that, that you want to be using a certain set of timelines and timetables, because one thing for sure that I found out is that, again, if I'm looking on the 15-minute chart, it might be telling a different story than the 1-minute chart. And so I can't be charting support and resistance on the 15-minute or on the 1 minute and be using it for the 15-minute. That's just never, you're going to chop, you're just getting too many conflicting signals. Okay. And I know a lot of people are going to be a little confused by this. And the reason that they're not the same is because although you might be using the 1-minute chart, if you're using 15-minute resistance points, you don't need the stock to go there right away. And what I mean by that is that your time length for the trade is going to be much different. So on a 15-minute chart or an hour chart, you might be expecting somewhat of a pullback. You might be expecting, because it probably is a larger range, you might be expecting for us to pull back a little bit. And because again, your timeline is going to be different. When you're trading on the 1 minute, very rarely have I found that you're going to be looking for a trade that is going to follow into longer than, let's call it, a day and a half. So that's why, it's really different, because on a 1 minute, you're not going to be too forgiving with your stop loss. Where on a 15-minute, you might even be expecting a pullback. So that's what's really important to note about those. And so what I typically like to do is that I like to use the 5-minute, the daily, and the hourly And the reason that I do that is, again, I'm not going to trade on hourly resistance points. However, I'm going to want to know where those are, because when you get into like the daily, that's a really important chart to look at. And so I'll always take a look at that and just know where I'm at. Because even if I'm trading for a shorter amount of time, like I said, it's like a 5 minute or a 1 minute, chart trade, then what I'm going to do is at least want to know where the daily is. I don't have to trade off it, but I want to know where it is. So I'll typically, and the other thing that I wanted to mention about this was the fact that most of the time, or I won't say most of the time, but a large majority of the time, you'll find that a lot of the larger timeframes resistance points and a lot of the smaller ones seem to match up. And again, that would make sense, obviously. And so that's a really important, key piece there. So I always want to be, I have like 3 to 4 timelines that I like to look, timeframes I like to look at and chart resistance and support points. And then, I'll always keep them inside the back of my mind, kind of thing.
And what are those 3 support? Like, how do you specifically find, and as a beginner, would you recommend having more than one, or just practice finding, that one set of support and resistance? And lastly, does each support and resistance line that you have, if you have 3 of them, do they all line up with each other, or do they all kind of collide where it's like, hey, if it breaks one, it breaks them all? Or is it, if it breaks one, it only breaks the other support?
Yeah. Okay. So I'll take it backwards. So to your first part about if it breaks one, does it break it all? And so to me, this depends, because if you guys follow my tweets every single day, I pretty much give not a real bias, but different scenarios. And most of the time, the levels for me aren't like, this one is a bigger level, or I shouldn't say that this one's not a big level or another, but I don't expect, based on the levels, what the stock is going to do. However, I'll use other technicals like RSI, relative volume, stuff like that to pick my target. So if the target's lower, I might cut half at the first target, or halfway to my overall target. But if it's a higher profit target, then I might only cut, a quarter at that first target. So that's the first part. The other part was kind of how do you chart support resistance? And so this is the way that I look at this. There's typically 2 types of chartist that I've at least
ones that are
encountered.
right and ones that are fucking wrong.
And the difference that I've found is that typically traders like to chart either using wicks or full candles. And so what I mean by that is that if we take the daily chart or the 4 hour, something with a larger time frame, you're going to see some candles that wick down, wick back up, and close higher. And so what I've noticed is that some people will chart those they'll chart their support and resistance on the wicks. So that's the entire length of the candle.
How much of the wicks are they using? How much of this are they using the volume as opposed to just the price action to make these support and resistance?
I'd say they probably are using, and that's what I mean is that like a lot of people I think are a little different on how they do it. But I do think that volume probably plays a pretty good part into it.
Because we always talk about, these big moves can happen on low volume. You don't want to make that your support, right?
Yeah. And so, yeah, exactly. And so, yeah, no, you're spot on. But I will say that I have found that they're all probably still like a little biased. So even if we wick back up and that wick is super tall, they're still like itching to put that closer to the wick mark and the end of the candle than to put it at the body. So that's how I really feel that you have too. Me personally, I'm a person that likes the candle close support and resistance. So that means that I'm just going to go for the body I'm not going for the full stick of the candle. And that's just what I found works for me, because like we talked about, is that, I like to, because some of my trades I won't take unless it closes at a certain price. So for instance, it might hit my stop loss. Let's just say my stop loss is 100. It might go down to 98. But if it doesn't close the 4 hour below that 110, I'm okay with staying inside the trade. And so I think that really depends on what your personality is. Where do you like to chart it? And secondly, what kind of trader are you? Are you one that if it hits that price, you're out? Then maybe you go more for the for the full body candle. Or if you're someone who truly waits for candles to close, then you're probably closer to a body instead of a wick candle support and resistance chartist. And that's pretty much the way that I look at it.
So the third part of it was for the newer guys. Obviously, you said you had like 3 support and resistance points. Should they start off with more or less, like just testing to see which ones work? Like developing that strategy obviously has to be super important. Where do they go about coming up? And should they just use 1? Should they use 6 and narrow it down? Or how do you kind of start that?
So with support and resistance, you're certainly going to need to first find and test out, what do you like better? Do you like swing trades? Do you like daily trades? Do you like 15-minute trades? Do you like your stop real close? What's your risk appetite? Do you like, you gotta find out what your average trade time is, what time frames you're looking at, so many different things. But if I were newer to the system, the only things that I would be focusing on is having a 1-to-1 risk rate. So that means that my stop, or my, let's just say they use a strategy where you put your stop right below resistance. That's a situation where, do you want quick pops? Are you waiting to get breakouts, or are you waiting for wicks on the candles and you want to swing something for all-time highs? You really got to find out your personality. And then what I would do is that if I were newer to this, I would chart out 2 resistance points that are, I don't want to say equal distance, but really getting comfortable at trying to chart on larger time frames, because the smaller time frames are really tough for newer traders. And I found that a lot of them get really frustrated on the smaller time frames when they're charting support and resistance for 2 reasons. One, they want the price to hit that level and then get smoked. And on a smaller time frame, sometimes that doesn't happen, because all you need is, someone with a large amount of money to hit the buy ask. And then the second part to that is that not only do they have an issue with, bouncing off, but just in general, they have a harder time identifying, rightfully so. There's a lot of different wicks and candles and stuff like that. So long story short, I think that it's better to find, you don't really want to go too crazy back, but just 3 support and resistance areas on maybe the 5 or the 15-minute chart, and just put them out every day. And so go back, don't go farther back than 21 days. Keep it really simple, keep it right to the point, and then, just keep playing around with it. Because what you'll do is that, sometimes you'll be a little bit more loose with your support. Sometimes it'll be right on the price. Sometimes you'll give it 10 cents. And the biggest thing is that you got to find out, do you want it to hit that level and then break off? Or are you okay with kind of being like a chop zone for that level?
All right. Well, we'll go into more in support and resistance. I think we have a little more advanced stuff we can go into. Maybe we can dive into it again, either next Wednesday or on Sunday. We'll figure it out. We got a lot of recording to do because Hugh does have a pretty busy fall. But we do want to go into a article of the week. It's just on Yahoo Finance. Sometimes I like to go on there just to get a little easy topic for the day. But this article is actually really good for stock market news of the week. And I'll read it in an exciting voice so we can, follow along and not get too bored. So here we go. There's a ton going on in the markets right now. Stocks got smoked to start the week with the summer rally appearing to have stalled. The tech-heavy NASDAQ is now down a quick 5% just a few trading days after rallying about 25% from mid-June to mid-August. On Monday, the S&P 500 endured its worst day since June 16th, a date that probably sounds familiar to market enthusiasts. It's the same day the S&P 500 hit its most recent bottom. We did mention that a little earlier. So worst day since June 16th, which is when it hits most recent bottom. Treasury yields are rising as investors ratchet up bets. The Feds won't change course imminently. Still, the yield curve remains deeply inverted, a situation that has typically preceded recession. What do you think about that? As this whole first part, are we coming to a recession? I mean, we've been talking about it forever, but is that just a buzzword now to make us fucking sad?
I think we're already there, but yes.
Okay. The dollar is back near 20-year high against the euro. The euro once again traded below parity with the dollar on Monday as concerns grow about the economic outlook in Europe. And the economic situation in China, which is always a challenge to completely suss out, appears to be deteriorating amid historic droughts, COVID lockdowns, and persistent risks from its real estate sector. China, always tough to read. And and we talked about this earlier too, mainly from January, but the recent resurgence of the meme trade continued to fall apart on Monday, with shares of AMC falling 42% after the company's new preferred stock limit, this is funny, or stock unit, ticker APE, $APE, started trading. Those units also fell 12% to start the week. Bed Bath & Beyond also continued its recent collapse, falling another 16%, so meme stocks are fucking donezo for the time being. Or maybe it's time for them to bounce. Put it all together and things don't look so great. Indexes are going down and individual stocks are blowing up, and a recession is increasingly being priced in. Go back in time about 2 weeks ago and the opposite was true. Investors were buying, meme trades were roaring, and recession fears were fading. For some time now, a common refrain we've heard from investors and strategists is that if you have a simple view of what's happening in the market and the economy right now, you are mistaken. Go down the list of negatives in today's market, and you're likely to find an equal, opposite, and positive indicator on the health of this market. Inverted yield curve, go look at the strong labor market. 2 quarters of negative GDP growth, it was just an inventory drawdown. Gas continues falling under lack of demand, savings for consumers to spend money elsewhere. It's basically saying nothing fucking makes sense. But what do you think about that article? Obviously, this is just from Yahoo Finance. I just thought it was an interesting read. What did you think about it all? Just saying, like, no one knows what's going on. I felt like it was pretty honest. What are your thoughts?
Yeah. I mean, a lot of times it feels like we're constantly being flipped one way or the other. That being said, a lot of funds got really short on this rally. So I think, like the media kind of sways in that direction, if that makes sense, because that's where the bets are. But yeah, overall, the apes, I did send out a tweet, I think Tuesday about the apes, like, I don't even know what it was. It was just like a headline that I saw, and holy shit, did I get my head chewed off. I didn't even say anything crazy. I was like, listen, you
gotta keep it peaceful with those things. They're actually like actual like chimps and apes. So like they are quick to react and very strong, and they don't care about their opponent, and they'll eat you alive. They'll rip your heart out without fear of what your family thinks, dude. They're fucking ruthless animals that will hold on to their stocks until the fucking wheels fall off. They don't care if AMC hasn't had a customer in 6 years. They will hold that motherfucker. If all video games are banned, GameStop will still be above $400 fucking dollars. This is not a game, Hugh Henney. This is fucking a lifestyle. These motherfuckers were raised in the Amazon, the jungle. These are ruthless beasts, and you don't seem to fucking understand. If you want to keep making tweets fucking threatening them, they'll come and keep coming at you until you regret it, until you're bleeding from your heart. So, I mean, you can keep it up, but whatever, man. I mean, that's your choice. I've been watching a little Mike Tyson highlights recently. So.
Listen. Respectfully to the apes, I got a lot of thing about the whole, apes, different dilution, and and that I was told I was being paid I was told I was being paid by the shorts.
Yeah, dude. We actually hit number one back in the day by being mad at Robinhood and all them. So
Yeah,
we're still a big AMC. I went to AMC last week. I saw a Dragon Ball Z movie. It's fucking sick, dude. AMC's still dope. I had a blast. I spent like $200 there. I got like alcohol. I got fucking hammered. I was watching movies, eating edibles. Dude, I was having a ball.
Yeah, basically going into midterms, I know they're going to try and save the market best of their ability. That being said, this bear market rally really came at an interesting time because going into midterms, like I said, they typically want to save the market. So unless they're going to bring it higher, into midterms forcefully, they kind of already blew their bazooka. And the thing is that, like we just talked about, is that if hedge funds are short, that doesn't bode well. Typically, those two are never all off sides. But when they are, it's explosions one way or the other. Being said,
when Trump was going for a re-election, you knew that bitch was going to explode because that was what he ran. Like that was one of the biggest things he ran on was how successful the market was.
Yeah, no, exactly. And they really do. They really do try to keep the market up into midterms. Like I said, though, is that I just think that's going to be extremely hard inside this climate. I think another bad earnings or another high inflation reading absolutely smokes the market below, lows currently. If CPI hits honestly, we'd probably halt down if CPI does go higher.
All right, I got two stories. I was just scrolling Instagram while you were fucking talking because that was a little disrespectful. XXL posted, I don't know why, dude, that's so funny to me. Capitol Records drops virtual AI rapper F in Mecca after instances surface of it saying the N-word and perpetuating stereotypes. It looks like, here, I'm kind of showing it to the camera. It looks like Lil Pump.
Yeah.
So it's a pretty like ambiguous, right? It doesn't, you can't really tell, but the fact that a record label dropped it and somehow the AI developed into using the N-word on its own is pretty fucking wild, but whatever. I don't know. I just thought that was a little crazy. So this is a little fun one. Obviously a fun anecdote at the end of every episode. It's been a little time that's passed, a couple weeks ago. There's a FinTwit figure, but that did this to me. But so we're at like a little concert thing and having a ball, and someone's like, "Hey, do you want a weed pen?" I'm like, "Hell yeah, dude! Let me rip this shit, dude." So, I ripped this thing, dude. I really long day, drinking a while. Just really want to hit it some good THC in the body. I tasted it. I'm like, doesn't taste quite like weed. I'm like, hey, what is this? He's like, oh, it's DMT. I was like, no. And immediately I am just tripping sack, right? I am going through it at this concert and I'm like mad, right? I'm mad at the guy. I'm like, he drugged me, but at the same time, I'm like vibing too. Jesus. It's like Tiesto. And I'm like, dun, 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 dun. But I'm just like, I got this mad look on my face. But thank God it was only something that lasted 10 minutes. But at least now I know, should probably stick away from taking dab pens from random people, because apparently you can put a lot of things in them these days. So PSA, be careful of what you suck on at the club. Because hell yeah. So just a little PSA for the homies. Hope you guys enjoyed today's episode, and we will be back on Sunday with more. Peace. Love you.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.